Testing 1, 2, 3. Testing 1, 2, 3. The rain in Spain falls mainly on the plains. Yeah. Hey, it's Tuesday, February 23rd, 2016. Let's trade some Forex, huh? Geek boosted. But Marina's gone pro. Good job, Marina. Welcome to Forex.Today. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com, an ECN that gives traders access to Forex and all the other wonderful goodies that go with it, like, oh, you want to trade stock indices? Yeah. How about gold and oil? Yeah. It's also very important to have those charts for global macroeconomic analysis. We do these sessions here at Forex.Today at 7:30 in the morning, Monday through Thursday, and every Friday at fxstreet.com, where I'm also Speaker of the Year. Cool. Let me remind you that trading Forex is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money cannot afford to lose. And hello, everybody. Hey, you want to do some technical analysis? Yeah, me too. Let's start. No, this page is in the way. There we go. Let's start with the piggy. More good scalping out of this sucker. Yesterday, I looked at it on, let's see. Okay, let me zoom back in. I looked at it, I guess, oh, that's why it's on a 4 hour. On a 1 hour, and guess what it was doing in Asia? Beep. Beep. That's what it looked like on the Tokyo Open. Lovely. No, Monday was a special event at FX Street because it was the 10-year anniversary of my first event there. That was special. Yeah. So, hoorah! It was great? Oh, thank you. Where were you 10 years ago when I did that seminar for the first time? All right, so anyways, let's go in here. Guess what I did? Put. Don't you love it? Put. So the way that Asia started was, holy smokes, look at the Japanese yens. So Japanese yen got super ripper strong. There was lots of things going on. Obviously, some concerns about the UK, and then you can see the pound the previous day very weak, right, based on Brexit. But there was also just a lot going on in Japan. I forget who it was. Was it Aso or Kuroda? One of those guys was speaking under testimony, and it might have been Aso, because they discussed this fabulous, economic concept called quantitative easing while jacking up taxes. What? So yeah, they want to create inflation. They're printing money. They want wage growth to go up, and they want to raise taxes too. What? So they're doing that, and so I think it was also under testimony. It's like, yeah, we're gonna jack up taxes, coming in the new fiscal year, and holy smoke. So anyways, that's not good. and the Japanese yen was strong. So there was just a lot of things going on. But I was looking around my charts and nothing was strong except Japanese yen. And so anyways, I started here though. Pig dog, this set up before the yen got strong. Okay. So a little put south here. And I was just doing 25 OCOs, but you know, you could have had at least a couple of 25 OCOs in here. We've been working on putts, haven't we? So you can see sort of if you're looking at this area here, let me mark it on like a 15-minute chart. Let's see, get scrolling. You can see it was nice little breakout, you know, some nice moves. Even on a smaller time frame, there was a little pullback in here, but it was pretty easy actually, just chow, right? And then pull back, do it again, chow. And that's what I've been teaching you. Put that sucker. We have to play the Requiem, however. I lost my yen, my Aussie. So I'll pull this up for you. I was in at 78.90 something, so 79. And as you know, I was up 330 pips off of. Oh, this isn't okay. I gotta go back to here. And I want to explain to you why I made the decision to get out. All right, because these are the decisions that need to be made, and they're never easy. Okay, so I'm long here, right? Actually, lower than that, right? So yeah, so anyways, I'm long about here. Why did I get out? Is the $1 million question. Now, first of all, I got to go to this daily chart. Let me get my drawing tool going. I'm trying to be patient, and I'm long this thing, what, a week and a half, 2 weeks? Because, oh yeah, that's right. I'm not long there. I'm in at 79, that's 80. Okay, I'm in down here. Okay, world of patience, right? All right. So let's go. We come up and we jam right into the daily 21. Do you remember this? And I explained to you that it's supposed to come down. That's why we use the 21, and that you could certainly short-term scalp down. And in fact, I believe in here was the Aussie jobs report. I did a putt short on this, and I think I picked up 50 pips. And then I think I did it again the next day for some other reason, I can't remember, but I picked up another 50 pips. Hedging this first trade, which is long, right? So long this, and you know, short here, protect the position, short here, protect the position. Comes down, makes a nice bounce at the weekly M2 as it's supposed to, psychological level of 80, 88, right? 80,000. It's supposed to go up, right? And I'm also, as a bull, thinking about this. And also on a smaller time frame, was it the 4 hour? Yeah, okay. And then on the 4 hour, what I was watching was up, down to the 21, and then it's supposed to come up and make a new higher high, and I'm going to make 1,000, right? That was the plan. But we had touched this daily. Remember, this is the daily 21, and we have done it before, and there was a resistance here. I was growing pretty concerned that we ran out of steam because we're clearly at resistance. What? Came down to the nice little bouncy bounce. Okay, I'm cool there. But look at the oscillator when I'm touching resistance last night. For you, it might have been this morning, but for me, it was last night in Asia. Okay. And after this dramatic drop, how do you think I feel? Right? I survived this pullback. That's fine. It was supposed to fall. Then it hit that daily, hit whatever it was supposed to on the daily. So it was supposed to go back up, which it did. I'm feeling nice again. Remember up here, I'm up 300 pips. And then last night, whoop, 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 whoop. Should I ignore this, guys? Should I ignore this 4-hour stochastic cycle? Should I ignore that it hit resistance and failed again? And if it falls on the 4-hour, if it makes a complete cycle like this, how long will it take to make that cycle? 2 or 3 days? And if it's 2 or 3 days, is it possible that this, is it possible and potentially likely that we never make a higher high, that the yen stays strong and come all the way down and knock me out at break even? And remember the topic of yesterday's webinar and the topic of my very first webinar 10 years ago was risk management, knowing when to leave your lover. So what do I do here? Am I in love with this trade? How much do I want the bragging rights to say, oh, look, guys, see, look, I made 800 pips on this trade. Aren't I the greatest trader in the whole wide world? Who cares about that nonsense, right? The point is, did my risk increase? And if so, what am I going to do to manage the risk? Right? And so I'm looking at this like after this giant drop, I face this type of risk. And not only could it come down to support, it could completely reverse, right? I mean, that's a potential, right? And is there any particular reason why the Japanese yen could get significantly stronger over the next, 4 weeks? Ryan's got a few. Well, spill your beans. Repatriation. That's the one I like, Oren. Why are they going to repatriate? BOJ intervention would probably weaken it, Randy, because they're already negative interest rates. So more negative interest rates and then more likely more quantitative easing, that would have the opposite effect. That would probably weaken the Japanese yen. The answer I'm looking for is fiscal year end. The increase in taxes have to do with retail sales, so that's not going to make Toyota move money back to the motherland. But it will be a fiscal drag or an economic drag at some point in the future. But right now, what I'm thinking is, very often, if you look at, what does Wayne do in March? Wayne is usually a buyer of Japanese yen in March. All right, so there's a question here. Why not just move my stop to 80.80? Well, I could do that, right? But here's the situation. I think the probability of a pullback to the previous level of support, sort of in this level, is pretty high. Couldn't I just buy it down there? Like, does the world honestly care two hoots about how many pips I make on this, whether it's 200, 300, 500, or 1,000? Who cares? Besides bragging rights, but there's no bragging in Forex, right? So my thought process, guys, and this is what I'm trying to explain to you, on the daily, this is being squeezed down. And on this 4-hour, I could have a 2 or 3 or 4 day down cycle, and I got repatriation coming up. So my thought process is, why don't I just get out? And I can always justify this dramatic move in Asia. Because remember, I don't know what's happening while I'm sleeping, right? There's a pretty reasonable chance this could have been down here this morning. So you know what I did? I did two things. Well, I did one thing. I shorted this and made some money. Uh-huh. Just like the pound dollar, this one actually took off faster. And the second thing I did is I took profit with 200 pips right here. But I made some money on the way down too. And remember, I hedged here and I think the week before in here. So I hedged here and made money on this drop. I hedged here and made money on this drop. I hedged here and made money on this drop, and then took 200 pips here. So I think at the end I still got my 300 pips. But, and of course my favorite joke in the world, and that's a big but, I can still buy it down here later, right? When technicals are more favorable to my analysis. So if I wanted to, I could just buy it here and not have the risk on the downside. Okay, so there it is. I had to make that decision yesterday, guys, and there was a lot going on fundamentally, a lot going on technically on multiple time frames, risk reward, how long do I want to keep hedging this? You know, at some point, it's better to take the money, isn't it? I mean, I could hedge it all the way down and say, well, I didn't lose any money. I made 200 pips on the way down. Yeah, well, I could have also taken profit and made the 200 pips down, right? So, you know, I don't know. I don't know if it was a good call or not, nor do I really care. Because I made my decision and then that's it. But what happens after that, I don't know. You know, you got to be Taoist or Buddhist or something. Just, you know, I don't know, go with the flow. Cool. So who's going to meet me in Shenzhen? I'm booking my hotel and my flight probably today. Anybody? Nikkei? Sure, Chaba. Anybody? Come on, Shenzhen. Have fun. For Chinese Forex Expo. I don't really enter with pending orders. I generally don't. It scares me. Because very often what happens is you're buying, well, what I see is traders use it improperly and they're buying falling knives. But if, let me just draw over top of these charts for a second. The only situation I might buy with a pending order is like, let's say, don't look at the charts, just look at what I'm drawing, okay? If I'm in a market like that and I see, you know, I might throw a pending order here and a stop here, right? I might throw a pending order here, you know, here and a stop below here, that kind of thing. Which is fine because it's an uptrend. What I often see traders do, however, is, you know, typical amateur traders, they do the worst thing ever where, you know, they throw down an order like to buy here. Right. And so that's dangerous, is all I'm saying. So I don't know if that's what you want to do. Thank you, Anthony. But seriously, no one out there in Asia, no one wants to just swing out? No tourists I mean, it's basically Hong Kong. All right. Guess I'll go just have a good time all by myself. When is it? It's April 16th. I'll get there a day early. I speak for 2 days and then I'll stay a day late. Next year you'll be there. I don't know if I'll be there next year. All right. So anyways, we have a request for the Nikkei. What, this thing? So we're caught between some pivots here. Is there a translator? I believe it's in English. But back when I was a venture capitalist, way before Forex, I did it was supposed to be a 2-hour speech on venture capital and the dry powder and overhang of investment opportunities and stuff that was going on in the Silicon Valley. And I was in Korea, and I even had the president of Korea's personal translator, who was an amazing woman and an amazing translator. But it ended up being like 4 hours. The funny thing about the Koreans, and there's probably Koreans in the room, so I got to be careful. I'm in this room with CEOs. I'm the keynote speaker. Like I said, it was supposed to be a 2-hour speech, and with the translation, it ended up being closer to 4. But everyone in the room understood English. Most people in the room could speak English quite well, but maybe not perfectly. And everyone in the room pretended that they only spoke Korean. Because it'd be too embarrassing for them to admit that they didn't speak perfect English. I'm like, what? Yeah, yeah, no, I believe it's in English. Okay, all right. So let's do some diggity. Nikkei. So what do you look for? Well, what is the direction of the trend in your humble opinion? Right, it says sideways. I just see higher, lower high, lower low. That's all I see. Okay. You see this going on in here? Does this say up or down? That actually says down. And so you could look at this chart. I don't care what it is. You would look at it and say, I'm probably bearish. It's probably setting up to fall. We just need some resistance. I'm looking at roll reversals and I'm looking at pivots. Eventually, according to this oscillator, it's going to work its way down. And I should sell this asset class. And in this case, it's the Japanese stock market. Okay. And it just happens to be working off of a monthly pivot in here as resistance. I wouldn't have thought that. Okay. I would have thought it would have made it a little bit higher. Right? My thought process would probably be like this. But if that were to be the case, if you're doing your technical analysis on Sunday or Monday, you might say, well, if it comes up here into this cluster of pivots, I'll probably, I'll expect the Japanese stock market in this case to fall. And what do we play in the currency market if the Nikkei falls? What do we want to buy or sell in the currency markets? That's right. Sean is right. Sean would say probably strong Japanese yen. Okay, and that would be your intermarket analysis. You'd say, well, if not today, sometime soon, the Japanese yen will probably get strong. Right? So then you say, well, one of my favorite things to do in this world is, I don't know, sell CAD yen. I wonder if I have any opportunities. Do, 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 do. Okay, and this is, so that would have been down in here's, right? Okay. Or what else is your favorite? Do you like to sell the Kiwi yen? So this chart speaks for itself, doesn't it? What does this chart say to you? I know it's pretty amateur, but we should just go, no, no, that's pure, that's straightforward. This is elementary Forex 101. Basic technical analysis. Oh, oh, wait. Yeah, watch this. Beep, beep. Nah, I guess I'll get rid of this. Okay, that's better, right? Okay. M2, 2. Let's see. I don't even know how we need to play this. Well, anyways, how about down? Yeah, you could do the sideways thing. Because what was interesting yesterday was it had to do with yen strength and nothing else. Nothing else really happened. Okay. Now later on, the Euro weekend, right? But that can't be a shock either, right? So we can look at that. And okay, in this case, we're just riding the 5 down on the daily. Okay. Okay. And so what I'd probably prepare to do is, sell again. Look at all the news coming up, huh? It's all K Schiller though. Wouldn't worry too much about it. But I think the thing that you should probably be preparing to do would be like, I think like pound trades, right? The black EMA is an 8 SMA. No, all right, let's not look at that one. Really, no one, you guys are gonna just let me hang in Shenzhen, huh? Boo-hoo. By the way, if you missed yesterday's webinar at FX Street, 5 ways to leave your lover, how to exit a bad trade, it is now uploaded to fxstreet.com. Oh, sorry, I got a lot going on. All right, so where do we go from here? Which is the way that's clear? So we've already missed this opportunity. So now war. Well, now it's supposed to head down to the next level. Yen, you have to be careful of psych levels, so I always like to have price going here. Okay. If the weekly central pivot is your top, what's your target? Thank you. S2. That gets us down to about 111. Okay. So that's where we're going. Which is the way that's clear. Still looking for that blue jean baby queen. Prettiest trader I'd ever seen. All right. Yeah, we're through the monthly pivots and everything. I feel so naked. So this yen could continue strong into March. And I don't know how long it's going to last, but I did tell you pretty straightforward that 6 months ago that in March, very often you'll see a strong yen. So maybe this is the beginning. And then there'll be a prolonged sort of up and down, but generally sideways, 200 pips up, 200 pips down until the end of summer. A lot of putts. Isn't there a song called I'll Meet You in Shenzhen? You guys are going to leave me hanging? I'll have to just hang out all by myself at the Ritz-Carlton. Nobody loves me. All right, fine. Fine. Fine, be that way. Yes. Yeah, it's China Forex Expo. Here it is. James Dean. James Dean. So you might get really good at putting. So, one of the things I'm working on with my mentoree is to have positions where he's long-term long, but on a daily basis be short-term short if it's needed, right? That'd be cool, Grace. The excellent session from Wednesday 17th. Wow, from Wednesday, February 17th, eh, Andrew? Well, have you tried the YouTube? Hang on. The YouTube channel for Forex.Today? Let me get that for you, sir. YouTube. Boop. Still looking for that blue jean baby queen. Prettiest Euro short I've ever seen. So that will get you there. James Dean. So the 17th, excellent webinar from the 17th. Is that it? Live 16th? 17th. There you go. Compliments of the firm. Good. So Andrew's got it. Hey, Andrew, have you opened up a demo account or a live account at TradersWay yet? Good. Then we're all good. Are you on the YouTube channel? Just go to the YouTube channel. Yeah, YouTube is like horrific at. I have a friend that used to work at Google who then was on the engineering team for YouTube, and I had some stern discussions with him about how YouTube ranks videos. And I learned a couple of things interesting, not helpful, but interesting. That you could be a $1 trillion company and still suck. But anyways. Okay, so so yen maybe get some strong strength. So what I was trying to say earlier is one thing you could work on your own is develop a fundamental or long-term technical bias, trade it, and stay in it as long as you possibly can, until, unless hope becomes your major strategy. Well, if that's the case, then you know, maybe get up. But have a long-term long. Know what you want to do in the morning. When you wake up, man, I hope I can sell some Japanese yen today. And then you open up your charts and you're like, ooh, that doesn't look good. I think the Japanese yen is going to be strong. So I think I'll short-term short this thing to help the market get down to support. And then I'll try to long-term long it, which means buy it, jam the stop at break even, and never look back. And that way, you're investing and hedging your investments. It's all indirect, of course, because you're not saying, well, I'm doing this to not make profit, but just to offset losses. No, I actually want you to put money in your pocket. But think of it this way, and I was describing it during the mentoring session this way, like that one is for income, right? The short-term puts, short-term short, for example, that's income. And your longer-term swing trades, on the other hand, are wealth. And it's good to be working on both at the same time. So I'd like you to practice that. Okay? Another thing that we talked about several months ago was at the very beginning of the year, I asked you to start your new trading year with a marketable idea. And I wanted you to write it down on paper. Lots of people said they would. Of course, I know no one is actually going to do it. But this idea is like if you sat down with an investor and you said, okay, investor, give me $1 million. And the investor inevitably is going to say, well, if I gave you $1 million, what would you do with it? And then you should follow up with an intelligent answer. Well, I believe based on my analysis that blah, 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 blah. Japanese yen will be strong in the first quarter, sideways in the second, third, weak in the fourth. And let me tell you why. And the investor says, holy smokes, you sound prepared, you sound professional, you sound like you have a plan. Sure, I'll give you $1 million. Okay? Where most people just don't have an answer at all, and well, that's not the track record of success I'm trying to develop with you, right? Because if you have no idea what you want to do, then how do you expect a positive outcome? You don't have a business plan, son. What is it that you do? What's your major contribution to society? It should be setting market prices at their equilibrium. What's your major right? Price discovery. Yeah. I provide hedge funds with liquidity. Mama didn't raise no liquidity event. So honestly, if I were me, I would work on that. And I think you see that I carry out the things we discuss, right? So, I'd like you to start there. What do you want to do on the long run? What's going to happen tomorrow? What's going to happen next week? What's going to happen next month? What's going to happen next quarter? Right? And enjoy that discovery. Okay? So anyways, let's pay attention to these psych levels. You'll notice when the Japanese yen trades, the USD yen in particular, things like 112, 113, 114, right? We're basically at 112 right now. 111, 110. Okay, and this is against the dollar, which is, I wouldn't call incredibly weak. Okay, so the yen is quite strong. Now, over the long run, let's say over the next 6 months, is Japan going to increase quantitative easing? Go figure that out. Okay. In your opinion, in the next 6 months, will commodities recover? Will gold and oil go up specifically? Why? Who's going to benefit? Will the ECB increase quantitative easing? Will the Fed raise interest rates? Will the Fed introduce negative interest rates? Negative deposit rates? Will the UK exit the Eurozone in June? Will positive things happen between now and June for the UK? Some pretty interesting questions in there, right? Do you think, excuse me, me, I'm just shocked how old Bill Gates looks all of a sudden. I think you can develop opinions on what is likely to happen with some of these issues. I think you could write down the questions and spend a couple of hours a day over the course of a week too, and write down good answers. So Warren says if the Japanese yen gets too strong, it will intervene. Yeah. Sounds interesting. let's put it together. When are they going to intervene? Maybe you should start looking at meetings. When are there? When is the next? When are their next meetings? What meetings do they typically act? August or October? Grace says we should take China's weakness into consideration too, right? Well, is the Chinese yuan weak? Let's look at it this way. Okay. This is the USD yen. Which one is the yuan pegged to? The US dollar or the Japanese yen? So during this period here, this is the US dollar versus the Japanese yen. So the dollar has been strong. So what would you assume has happened with the Chinese yuan? Anthony, it's pegged to the US dollar. James, it's pegged to the US dollar. James. See, here's the problem, James. You're probably highly educated. You probably read. You probably read lots of newspapers. Does this look like it's weakened? No. But newspapers love to just throw out stuff that everybody knows is a fact, right? Like they devalue their currency. All right. So what's the trend in their value of their currency? It's not down. Okay. They want it to fall now, right? And look what's happened more recently. Okay. So, anyways, yes, a strengthening Japanese yen is good for China because they compete with China. Okay. So if China is finding a way to devalue their currency on the shorter term, meaning over the last couple of weeks, because that's a few years right there, right? No, I'm not talking Japanese yen. Come on, guys. By the way, if you don't get it, keep asking, right? So I'm not being mean. This is USD yen. Okay. Yen used to be down here at 75. Then we went all the way to 125. What that is showing you is the dollar is getting strong, but also the Japanese yen is getting weak. Okay. One way you can look at this is, what if you replace the dollar here with the Chinese yuan and said, this is China versus Japan. And as this is going up, Chinese products are getting more expensive and Japanese products are getting cheaper. Okay? Because they're, so what happens is, like, let's say the dollar is going up in value. Well, the yuan is pegged, it's a floating peg. So it's moving up and down 2 standard deviations every day. Okay? Within a band, but that's what it looks like. So the Japanese yen is artificially weak, and the yuan is actually quite strong relative to a few years ago. So now we got like a currency war. And if I really wanted to start a currency war and I was the People's Bank of China, you know what I'd do? I'd buy JGBs. I would take my foreign reserves, let's say, and instead of buying US Treasuries, I would buy Japanese yen. Therefore, demand for US dollars would fall, so the US dollar would fall, which means the Chinese currency would fall. Meanwhile, China's buying up Japanese yen, so the value for the Japanese yen would go up, right? And Chinese products would get expensive. Oh, snap. Win-win. Well, some people are going to lose. Right. So it's one of those things, James, right? Like, oh, everyone knows China devalues their currency, right? They're manipulators. Yeah, well, except for their currency has gained value steadily for several years straight. Conventional wisdom, right? We got to be careful. China manipulates everything. Let's see. A central banker's job is to manipulate the currency. That's what monetary policy is. Every single day, the Fed goes into the market and says, we will lower interest rates or we'll raise interest rates. I'm not even talking about quantitative easing, which in of itself, right, is increasing money supply, manipulating the currency. Okay? Or the opposite, raising the value of the currency, right? Or, so that's what they do, right? So it's funny to say, oh, China, you're a manipulator. Well, look at Japan. They're doing quantitative easing. They're manipulating the market. What about the ECB? They're printing money and buying their own debt. What? Of course they're manipulators, but everyone's a manipulator. Bruno says that makes Forex more interesting. Oh, yeah. Ooh, yeah. So anyways, that's what I'd like you to focus on. I think we're done with technical analysis today. I want you to think about what's going to happen over the next couple of weeks, next couple of months, what's going to happen over summer. Investigate some of these things. It's time to take your trading to the next level. Okay? You've seen me, trade off pivot points a million times. You've seen me trade off support and resistance a million times. You've seen me spot, swing, trade, carry. You've seen me do everything a million times, which is cool, and I'll continue to do it. But I want you to stop delaying your inevitable success. You're robbing yourself of your destiny. Okay? I want you to at least start with longer term charts, right? And say, are you going to buy the USD yen, and where and when and why? Simple question. What would make this go up? Well, how about additional quantitative easing? Well, when is that going to be? That's it, right? Right? What's going to happen on this 1 minute chart? That's actually a more difficult question than to say what's going to happen on this weekly chart. Okay? Where's the support and resistance, ladies and germs? How about this? Right? Let's say this is a college course. Is the USD yen, no, sorry, is the Euro USD going to fall down to parity in 2016? Yes or no? Please explain your answer. How could you not answer that question, right? You want to call yourself a foreign exchange trader, but you can't answer a question? That seems like, it seems like you should actually be thinking about that, right? I'll try Nuno. I'll try. Yeah. 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 I'll try. All right. Sure. 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 Yeah. Um. Yeah. That's a pretty basic question to start with, right, guys? Is the Euro USD going to go down to parity this year? Now, you'd have to answer a few questions like, where's the resistance? What would make euro weaker? What would make dollar stronger? When do these meetings occur? When what is priced in, let's say, in the Fed funds market, and how has that changed? I mean, you could pretty write a pretty detailed question, right? So every single week, I write a 2,000 word essay. It's 4 pages, single typed, single spaced. I think just this week you could just sit down and do some research and write a 2,000 word essay explaining and discussing the euro going to parity versus the US dollar, and come up with, you're going to have to write you know an introduction to your thought process, and then you're going to have several different key reasons why let's say 3 reasons why the euro will weaken, 3 reasons why the dollar will strengthen. Then you should talk about when these events are likely going to occur and why, and what current trends are in place, and then have a nice conclusion, wrap it all up in just 4 pages. I think you should do that. I do it. I'm a busy guy too. I got kids. I'm raising them. I got a job. I'm working it. I'm working on things in the future. I'm going to school and writing all this stuff. I think you could sit down and try to bang it out. It might only take you 6 or 7 hours. What did I do on Saturday? I spent 7 hours writing a paper about peak oil. Huh. Whale oil be. So I think if you want to get serious, I think I would start there. You need to have some deep thoughts about real questions, and I think maybe you'll get some. I think maybe you'll surprise yourself. And the cool thing is, as you start researching these things, like when are the next 4 or 5 ECB meetings, and which meetings do they typically change monetary policy? This process of discovery will be an education for you. You will become a smarter foreign exchange trader. And I hope you believe that to be true. So now, even though today's February, you might be thinking about, oh, wow, that October meeting with the ECB is going to be key. And somehow, I feel that makes you a better trader. Well, James, that's what I'm teaching you basically now, right? Macroeconomics. You can take a fundamentals course, and I'm going to reboot it so everyone that's paid for it will be able to re-access it. I've just had so much run into me in my life. I'm lagging. I need like uh, 3 more hours worth of content that I need to put in there. So maybe maybe during spring break I'll do it. But that would be an interesting place to start, I suppose. Would be the fundamentals course at FX Bootcamp. So I guess that's it. It's been a long, it's Tuesday. It's been a long week. So, yeah, so peace on earth. May the pips be with you. May your profits be above average. And I'll see you tomorrow. And is anyone actually going to write a paper explaining and discussing whether the Euro USD is going to go to parity? Right? You don't have to do it for me. Right? I want you to become awesome, but you have to make yourself awesome. You know, imagine I was interviewing you for a job to work on my trading desk. You sat down. Great, great, great. Nice to meet you. Fine, great. All right. First question. Is the Euro USD going to parity in 2016? Well, I don't really do that. You know, what I like to do is blow. You've already. I would have just stood up by now. All right, get the hell out. By the way, you have to exit out the window. What? Yeah, the elevator is for traders only. You're exiting the building out the window. So, have a safe trip. Goodbye. Yeah. Yeah, Andrew says, you know, you had an interview like that once. No joke. Well, look, you're just a professional. I just can't imagine someone walking through the world and they call themselves a professional and someone asks them a pretty, you know, straightforward standard question that is on the minds of people, and you just don't have an answer. I don't care whether you're right or wrong, whether I agree with you or not, but how could you possibly even pretend to be a professional if you don't have an answer to a question like that? It just says you don't know what you're doing. And then how could you possibly plan for the near future? Because remember, technical analysis is about price and time and patterns. And, you know, even really fundamentals are very similar in patterns, and you can predict times and flows, and technical analysis firms your fundamental analysis and puts you into trades and stuff. I just don't imagine, I don't know. I don't think you can be a professional and just not have an opinion, right? Like 6 months in advance, I say, yeah, well, the Japanese yen's going to get strong in January, so I'm going to buy it then, and then I'm going to do this, and then I'm going to do that. And it's, you know, it's, I don't know. It should be straightforward, right? But like, if you walked on CNBC and they're like, oh, and next we have a professional Forex trader, right? And the camera goes to you, and then they're like, hey, so what about that euro? You know, there was a guy on Bloomberg today, because I actually listen to Bloomberg while I'm in the shower. I have Bloomberg TV in my shower. Yeah, I know. And they freak out because this guy, and I forget, I don't even know who it was, right? But he's like, yeah, well, the dollar's going to go down to 134. And they're like, whoa, they're freaking out. I'm like, dude, we did that 4 months ago, 5 months ago. We knew it was going down to 134, right? But he had his answers, and he knew his stuff, and he was talking about this, that, and the other thing, and smart, intelligent, obviously a professional Forex trader. And when as soon as he talked about his pound dollar going to 134, I remember the chart, right? We got it somewhere. I forget which one, but I'm going, yeah, you know what? I think I have the same chart. Right? And he's talking about what's going to happen between now and the end of the year and stuff like that. No, I'm never going to find it this way. Yeah, I think it's on this other one anyways. But long story short, you know, The only way to become a professional trader is to act like a professional trader. Like I said in my book, just fake it till you make it. Keep faking it until one day you wake up and you realize you've completely forgotten that you fake being a professional, and you just cruise central bank websites out of habit. You write business plans out of habit. You have outlooks out of habit. You have quarterly plans out of habit, right? You identify your strengths and weaknesses of habit because you were faking it before. You didn't know how to do some of these things before, but you did them anyways. And the process of doing it, you got smarter, also build positive trading habits. So the process, right? Here's how I looked at things. I realized a professional trader could give me an intelligent answer of whether the Euro USD is going to go down to parity, right? So, and I said, well, I didn't know that, but I know a professional would. So I need to sit down and figure that question. And the process of doing it will help me determine the things that make these things happen, but it also puts me in the right path of being a professional, because that's what professionals do. I also realized, why do 95% of real Forex traders fail and lose? Because they're unwilling or incapable of doing the work. So another big part of the path was earning it. Knowing that 95% of the people just don't earn it. So I just have to try to be the 5% that do earn it. You know what I mean? Maybe it doesn't make me a better trader, but at least I'm doing the right things that I believe will make me the better trader. Like I said, skip 5 years ahead. And if you were doing these types of things for 5 years, A, you're going to be a better trader because you learned how to survive. And B, wow, look how much better of a trader you're going to be because of your research and analysis and study of the markets and of the macros and of your trading and honing your strengths and addressing your weaknesses. And wow, holy smokes, you're going to be a fantastic trader. So you want to ensure that you do that. Right? In my other office, I was going to have a guy carve into the above the doors when I walked into my home office. I I, I wanted him to carve it in Latin, actually. Um, the work will set you right. And I thought, that's it. That's the secret to success, just doing the work. And I was going to have it carved in Latin and everything. And then someone told me that's what they had in the sign above Auschwitz. And I thought, oh, all right, I'm not going to do that. But I thought it was an interesting idea that it's the work. Don't worry about the trading. You understand technicals. It's fine. You'll figure out moving average crossovers. You'll figure out oscillators. You'll figure out pivot points. You got it. You'll figure out price action. You got it. If you're around 5 years from now, you'll figure all these things out. Especially if I'm teaching you every day, right? But it's the work. You need to be doing these other things. Sitting in these webinars an hour every day is fun and interesting and entertaining and educational. Great. What do you do the other 23 hours a day? Right? Well, right? So here's business planning. And by the way, I have these conversations with my own children, right? So, and I have this conversation with myself. But these are good questions, right? What are you going to do to leave, so that you can leave your day job? Right? I actually asked my kids these questions just the other day. You know, they're young kids, and I'm like, all right, so what do you want to be in life? And they answer the question, and they say, okay, what do you definitely not want to be? And what are you doing to make sure, right, that you do what you want to do in life? And what are the things that you should avoid? And what are you going to do today, right? You see, pretty hardcore questions, you know, for a 9-year-old. James, no, they don't have a day job. No, but they're big questions, right? So, you know, I think the day job thing's good. So therefore, I would focus on keeping your day job, every month putting money aside to save for your trading account, not putting it in your trading account, saving for it, so that 5 years from now, you'll be capitalized. So here's the cliche. You're not a very good trader, but you want to quit your day job as soon as possible. You throw money into an account. You hope if you could increase it by 1,000%, you'll have enough money to quit your day job. And so you go in with weak skills, no experience, incredibly high leverage. You blow up your trading account and you go back to working at 7-Eleven. What I would rather you do is spend the next 5 years doing things like mastering swing trading, because you only have maybe an hour a day to trade, and study technical analysis and price action and the things that I teach. Learn as much as you can about fundamental analysis. Maybe take a college course in economics, right? Macroeconomics and that kind of stuff. And save money, save money, save money. But treat your trading incredibly seriously. Like you're going to school for the next 4 years to get a degree, part-time, while you have your full-time job. 4 or 5 years later, you will have saved money, and you will be able to prove to yourself that you're a consistently profitable trader. Maybe for the last year on paper trading your demo, doing nothing but swing trades, you're finding that you're averaging somewhere between 500 and 2,000 pip a month, and you're making pretty decent money on paper, and you have refined skills, and you manage risk appropriately, and there's no big, you know, drawdowns or even build ups, right? You're trading with proper, you know, portfolio management skills. So then you sit down in year 5 with the money that you've been saving for the last 5 years. You put that into a trading account, and now that you're patient and disciplined and have real skills and confidence, you start to trade it like a mature professional trader, growing that so that you can quit your day job. So I would honestly, John, if I had a day job and I wanted to, you know, maybe independent one day, I would develop a business plan. What are you going to do over the next 4 years to ensure that you have a new career 4 or 5 years from now? I would have a written plan. I would have dates and times. I would do research. Awesome. Boom. Then we're on the right team, huh? All right. Peace on earth. May the pips be with you. May your profits be above average. And I'll see you tomorrow. Do you think an economics degree is on? No, Rick. I hire people with economics degrees, and I pay them like $6 an hour. But like, right? But you don't want to be ignorant, right? Like Michael Jackson says, "You're the ignorant. You're the ignorant." You know, you got to have some brains on your shoulders. Do you need a PhD? No. Do you need a college degree in economics? No. But I'll tell you what. Maybe you can't get a Harvard degree, but if you go on YouTube There are some great videos done by the University of Berkeley, the Haas School of Business, in which I've actually done a speech. I actually did a speech at the Haas School of Business 100 years ago. But the Haas School of Business has some macro and microeconomic courses that are entry level, so first and second year students, that are fabulously done. They're very, very well done. Better than Harvard's. And you should, I don't know, check them out. And they're totally free, right? There's enough resources out there on macroeconomics that you can actually take some college courses completely online. The University of California at Berkeley, Haas School of Business. Right? Haas is spelled H-A-A-S. Right? Yeah. Yeah, James, I'm worried about YJ. I sent him an email, no response. I'm really worried about him. I'll light some incense. So, namaste.